Londra'dan herkese merhaba. Altını konuşmak üzere özel bir parantez açıyoruz. Aslında küresel değerli metaller piyasasını yakından izleyen bir platform. Metals Daily'nin CEO'su Ross Norman'la bugün buluşuyoruz. Mr. Norman, thanks for joining our program.
Great pleasure.
First question, can we say that the correction phase in gold is over and the precious metals rally is back? What do you say?
Well, it would seem so. And what I mean by that is some degree of caution. These markets are incredibly volatile. We saw gold hitting an all-time high of 5,600, crashing down to 4,500 and recovering again quite smartly. To say that the rally's back in play, if you like, you would normally expect a 50% bounce from the top to the bottom and up again to confirm the validity of the underlying price strength that goes back to last summer. And to achieve that, we have to achieve a level of $5,000 an ounce, and we're just north of that. So I think that indicates on the charts that the mood is positive and we're back into the rally again.
Okay, so what triggered last week's sharp sell-off in gold and silver as well? What went wrong in the markets?
Yeah, some people ascribe it to the forthcoming appointment of the new Fed head. I'm not quite so convinced. I think it was the weight of numbers. The market moved ahead of itself. The market was overbought technically. It was awash with retail buying. When everybody is pointing at the same financial lifeboat, you've got a bit of an issue there, and that was quite clearly the case. Gold is the word on everybody's mouth at the moment, and I think the reason for that, underlying all of that, are for sure uncertainties, concerns geopolitically, concerns economically. But the real bedrock, if you like, to this gold rally, I believe, is central bank buying. And it's not just uncertainty. These are people who look for a multi-generational view on gold. And I think that what they're looking at is debt around the world. The American debt to GDP ratio at 120%, and across the G7 nations as well. I think there are concerns whether this can be paid down. We're not yet in a doom loop. But there are certainly concerns. What else can you go to? Really, it's only gold.
Yeah. Actually, for how many years have you been following these markets, I wonder?
Nearly 40.
Oh, 40. So you really know the markets and everything about gold very well. So
Maybe.
did you expect personally gold to test the 5,600 level and then pull back so sharply, or was it totally surprise for you?
Yeah, I'd like to show, I pretend I'm smarter than I really am, but I won't. I mean, our forecast back in December suggested that we think that gold will hit $6,400 as a high
When?
this year, during this year. It'll be probably later on this year. And for the average of 5,375, a level we've met, but so it's yet to play out. It's one of the most bullish forecasts. And forgive me for sounding a little bit self-important, but over the last 24 years, we are the leading gold price forecasters within the professional market. We don't always get it right, but what we do get right is when the markets go through an epic shift, we tend to do rather well. We tend to have a nose for trouble, and when things are not right, that's when we tend to win. And the last 3 years we've come second out of about 50 analysts. Anyway, the key point to this story really is we had very much a sense that things weren't right, and gold is very often described as the sum of all fears, economic, geopolitical. And I think it's seeing it performing as you might expect, a safe haven, a long-term store of value, all those wonderful words we use to describe it. Gold really is. And its bedrock, if you like, is an asset of last resort. Where do you go to if all else fails? And I think for some people, that's what they're looking at.
Yeah, I like the expression "sum of all fears." Yeah,
Yeah.
it's really correct. So when people name a level, they say that it is always tested. So you named $6,000 for this year. Is this the highest level gold can achieve? I mean, in history, for example, what is the highest level that gold can go this year, next year, or in 5 years' time? What do you expect?
Well, as we say, we think 6,400 will be the high for this year. I mean, I can remember talking about this some years ago at the gold conference in Dubai, and gold was then below $1,000. And I said it can go to 3,000, 5,000. And I can remember people in the room saying, Yeah, but would you want to live in a world where gold's $5,000? Because what else is going on? Well, we're now living in that world. Interestingly enough, your question is where could it go to? Well, there's no telling. It reflects fears. I think the real question might be what will unpick this rally? What can make it correct lower to, should we say, a level around $3,000 or $4,000? I think that if Donald Trump is successful, and he made allusions to this in Davos, in engineering a significant growth rally in the US. And at the moment, they have deficits every year. Take the UK, we've had a primary deficit for almost a generation. The last time we had a surplus was in 2001. If they can generate a surplus in America, then, and it's the view that he made at Davos, he would pull the other countries out the ditch economically. If there's growth in America, Europe will follow. It always works that way. And by extension, the Middle East and Africa, etc. Allow us to engineer a significant growth rally. You will follow. And people are pushing back against that. Sanctions and tariffs and so on to impoverish us and to enrich America is not very popular. Even if the long-term gain is that America wins and we all gain. So I think if America starts to pay down its debt, you might see gold correcting, but we're certainly some years away from seeing that actually happen.
Mhm. In the past, they say that all the cyclical turns are always long term in gold. When it
Yes.
starts to fall, it falls like for 5, 6 years. When it starts to rise, it was like 5 or 6 years again. So can we say that we are in this rising cycle in gold, and it will last, for example, 5 to 6 years?
Yeah, I think the cycle's a bit longer than that. I mean, if you had to pick a date for the rally, it'd be 2022, early 2022. And if you want to pick a particular moment, I would suggest it was the Ukraine-Russia issue. And it wasn't the war that kicked it off. It was the confiscation or sequestration of 300 billion in Russian assets. And I think for a lot of central banks around the world looking in, and by the way, that goes against international law. And by the way, we didn't even do that during the Second World War to Germany. It's quite an extreme act to seize in other countries' financial assets. So I think a lot of countries around the world looked at it and thought, we could be next. Bank of England hasn't returned Venezuela's gold. Germany is struggling to get its repatriation of its gold. There's sanctions everywhere. There's tariffs everywhere. There's confiscation of assets, of Russian assets. We might be next. Now, put your political thoughts aside for a moment. And if you're a reserve manager for a central bank and you're precautionary, you think, well, we need to have less dollar assets. We need to have something which is no one else has promised to pay. And really, you just fall back on gold. So again, this is not a political comment. It's just central bankers thinking, how do I protect the wealth of my country? What can I hold that cannot be confiscated or inflated away? And you only end up with one asset, and that's gold.
So how much more this rising cycle can last then?
It's a good question. I would imagine 2 or 3 years. And I hope it's not at the same pace we've seen, because it indicates that the world's going very badly awry. So, I mean, in a way, oddly enough, even though I'm a gold analyst and watch the market very closely, I prefer to live in a world where gold is steady around $5,000 or $6,000. It tells you that there is activity in normal areas like economic growth and other areas. We don't. This isn't a rally with a sense of euphoria attached to it. It's dealers holding their head in their hands, going, "Oh dear, this isn't good." None of us welcome that. So I would imagine Trump will be in power for another couple of years. He'll be working very hard to bring about the changes economically that he envisages he wants to bring about. I would imagine that will also map to the cycle of the gold rally, a couple of years to come.
Mr. Norman, can we say that the place of the gold can be challenged by cryptocurrencies and silver as well? Because some say that silver is more strategic than gold nowadays. Do you agree?
Well, silver's interesting. I mean, it's what they call a high beta gold. It's a leverage play on gold. Why is that? Speculators tend to adopt when they see gold going up, they tend to attract silver because they know there's a multiplier effect in there. That's slightly self-fulfilling, that argument, by the way. And so if gold goes up by X, silver goes up by roughly 2X. So it's a plaything often of speculators, especially in North America. But silver, of course, has got real industrial applications. The real concern about silver, not only that's joined the critical minerals list in America, and therefore there are chances it will be stockpiled, high inventories being built in America. There's also some very strong new applications coming through, such as solid state batteries that Samsung are looking to develop. And if 20% of global EVs, electric vehicles, adopt this technology, and they should, because it doubles the range of cars, that could consume about 40% of global mine production. So there are some very strong applications coming through for silver. The market's thin in terms of its pipeline. There are possibilities of stockpiles being built in China as well as the US. So fundamentally, it's quite attractive, and that's why we've seen a very extreme version of what's happened to gold happening to silver.
So when you think about gold markets, gold trading, where is the heart of gold? London,
Well,
Turkey? I don't know.
yeah, it's a very good question again. Historically, it's London, and it turns over between 125 and 150 billion dollars per day. It's a staggering amount. So all the gold that's traded in Turkey, in London, in Dubai, in New York, it's settled in London. It's the clearing point where all of those trades, be they spot trades, forwards, options, that's where the price settles historically. Is that still the case today? Well, it's interesting. I made the comment only yesterday to a friend of mine, which is we wake up in the morning in London and we look to see what Asia's done to the market with a bit of a smile on our face. In other words, some of the bigger moves are happening in Asian hours, in Chinese hours. So although the center of gravity is still very much in London, there are questions about whether it's pivoting now towards China because a lot of the big trades are happening there now. And they've got the infrastructure being developed for settlement, clearing, and vaulting, which you need if you need a grown-up global gold center.
What about Turkey? What do you say about Turkey and gold?
Yeah, well, it sits right in the middle, if you like, between those important two zones. You've got New York, London, and then you've got China, is the major players within the room. Turkey, in terms of its time zone, is ideal. It lives during Asian hours, it lives during London hours. So it's perfectly positioned, if you like, to develop a hub there, which is not just to serve its domestic market, but regionally. Dubai plays that role too. So it's got a challenge, if you like, in that regard. But I think Turks have got a strong cultural affinity for gold. It's got a large physically developed market, a central bank that appreciates the role of gold in its role in preserving value. So Turkey, yes, absolutely. Why not? You're seeing markets developing around the world, serving domestic markets. But I think in Turkey's case, it could go further than that and be a regional player in the gold market.
Mr. Norman, one last question and advice to the viewers that are listening to us now about gold trading. What is the biggest mistake done in gold trading, and what do you advise to them if they want to buy gold or sell gold? What do you say?
So what is the biggest mistake that people make?
Yeah, in gold trading.
Yeah, the biggest mistake, that's an easy one. They follow the news, they follow the tape, they buy emotionally. You shouldn't do that. You will get caught out. You have to sit back and take a very long, considered look at the world and see how much you like it compared to last year. If you like it a little bit less, you buy a little bit more gold. Do not buy on news because guess what? Somebody's already bought ahead of you and you'll probably get it wrong. So remove emotion. Forgive me for saying it. Metals Daily has the largest source of information on gold. You can be informed there. We are not gold bugs, but you should educate yourself and take a very dispassionate long-term view and don't trade in and out because you'll be chasing your tail. Take a trade, take a position, put it away, and look at it in a year's time and take another position then. That's how I trade. I try not to get excited because you will make mistakes for sure.
Metals Daily CEO Ross Norman, thanks for joining our program.
My great pleasure. Thank you.